How we doing? Nice to be with everybody today. Let's have a look here. SPY correction window. That's the thumbnail for today. Post FOMC looks like we're finally getting it. We had a nice surge to the upside thanks to Meta and Microsoft with beating earnings. They did fade immediately. We are coming back down to the post FOMC lows yesterday, which is around 63.40. Actually, the low's like 63.36. I'm looking to see where the day ends up finishing. I've got a couple trades that might offer me some nice reward to risk. We will find out if we potentially have a run and a sticky close around like this 63, 65 to 70 zone. I'm going to set a chart alarm. I'll move this down to about 65 or so. See if this is 65 or better. I start to see some profit trap. That profit trap will be, what happened to my alarm? I guess it's gone. Let's set an alert here, 6365. There's why 6365. Okay, so I'm going to set a chart alarm at 6365. If we get back up to this positive negative gamma level, that would be a nice way to finish the day. If we come down near the close or the lows from today, as well as retesting the lows from yesterday, then this is that imminent correction window that I talked about. Let me see how things are going on a trade side here. Nice. Got a little winner running. Swiss yen long. Very nice. Got some trading battle profits rolling in. That's good. Let's see here. So I'm going to close out euro yen for a loss. I'm going to take pound yen profits. I'm going to close out Swiss yen profits. Close out CAD yen profits. And now I want to figure out where everything else is going. I'm short the SPY. I'm short the Qs. Up about 600 bucks. This is a recap from my trading battle yesterday. I also bought a dip on gold. That's up about 300 bucks. The dollar yen's actually been a thorn in my side. I sold it at market around 149. I sold it again at 150. We're trading around 150.74. I've got another 151 pending. I'm going to see how that kind of works out for tomorrow. That could actually be the reason that kind of wipes away some of my profits. I'm up 2,100 bucks right now for the trading battle, but I'm going to wait and see if I can grab something by tomorrow's close. We'll keep an eye on things. All right, watching Qs, watching IWM. All right, so into the close today, watching these levels, 63.65. Do we come back and revisit the lows? I do want to watch this low because I do have a pending order. I'm looking for a 63.40 by 63.30, I believe. Let me check that here. Nope, that's way down there. Yeah, so I've got a 64.35. I totally did on the. That's way up. That's not going to fill. All right, that's not going to fill. 64s on the call side, not going to fill. The 63.10 by 0 is not going to fill, most likely. Modified low. VIX is 16.69. Oops, let's go 16.69. So 1.04%. Really? So 1.04%, and the market's actually moved 1.42. Where's the VIX at today at the highs? So VIX for the day was up to about 17. That's quite a bit over the expected move. So even a move of a 17 VIX, that's only 1.06. We definitely stretched beyond that. So I don't think we're going to go too much lower than this 63.40 level, 63.35 level. Let's see if I can get a little, I don't know, either a butterfly spread late in these last 22 minutes or a very lucky bull put spread. Let's find out. It's 35. I got a lot of trades running today. 35 butterfly put spread. Grab a little bit of credit there. 80 cents credit, 40. Low around 34. So that's more risk. 35. I'm going to see if I can trap this thing. 45 cents credit into the lows. Maybe 50 cents credit. 45 cents credit. Come on, 40 cents. Get lucky. All right, I'm going to let this hang out around 50 cents credit, see if I can nab that by the end of the day. Last 20 minutes here. So what I'm looking for on that broken wing butterfly is if price ends up getting down to the lows and kind of pinning that low at 63.35, that should be a profit trap. Trading up to 53 cents credit. Give me 45 cents, would you? I hate taking this trade for 40, but I got filled for 40 cents. Okay, so I'm in for a quick trade here at 40 cents last 20 minutes. Now the question is, do I have a profit trap on the way? We will find out. If I have a profit trap, that's up to 500 bucks. If I hold the lows above 63.40, I'll make 40 bucks. Anything at 63.39, 38, 37, 36, all every point is a $100 bonus until I pin it at 63.35, which would be today's low. All right. How's everybody doing, by the way? Sam's here. Donna's here. What's happening? Hey, Ryan. Thoughts on the copper drop? We talked about it yesterday during the trading battle. It's the biggest copper drop in history. I don't really know what to do with it. I think just be careful. I'm honestly, I'm not really going to do much with copper. I mean, I couldn't even tell you if this price action is accurate going into the futures market. Like, it just seems like something that is almost untradeable. These markets are going to be scrambling to make some sense of it. So I think the safest thing is just to stay the heck out of it. I don't know what other ramifications there are. I mean, in a way, it's like having the largest drop in history is not something I really want to step in the way of, because unless I get like a big reward to risk setup, I'm not that interested in trying to guess where this thing's going to go. We look back on my chart for copper. I mean, that's the weekly candle. This thing has been smashed, right? So week is way down. I think that daily candle is probably inaccurate. I feel like that's a discrepancy in feed, because I don't think we would, close here and then gap lower today. I feel like this is an inaccurate daily candle. But where we've gone for the weekly candle based on yesterday's push, this is like a 23 to 25% candle. Yeah, 25.5% from high to low. I am not touching copper. So looking back on the chart, I mean, going back to the technicals here back in 09, major support, major support, major support here again during COVID. We have some intermediate structure that could hold around this like three. I mean, it looks like we've got some strong support around like the $4 zone. It might just be like a massive range, honestly. Might just be a massive range. I'm just not going to step in the way, man. I think it's a little nuts. Good buys coming in on TLT today. That's good. Yep, TLT should be good. I've got a bid. I'm looking to get rid of this at, I want to get rid of my TLT as far as the diagonal spread goes. My sell call is at 89. And let me check my expiration here. So TLT, I'm going to go quickly on my, this is a, let's see here, 121. Why can't I organize this trade? Trying to group this thing. So this should be a broken wing. All right. This is showing some profit. I just can't organize it for whatever reason. So iron fly right there. So that reverse iron condor that we took this morning, daily profit play is up a full 100%. So I'm going to take full credit on that one. This iron fly is up about 20 bucks. This iron fly is down. I'm looking to grab another, hopefully, the heck, they won't let me organize it. I'm trying to just get another 40 bucks out of this. So I think right now, net, if we can make a little rip here these last 17 minutes and get back up to like 65 or 70, that would make me very happy on this trade here. There's a profit trap brewing for me that potentially pays up to 500 bucks, actually 400 bucks. So I'm going to see if I can get something in the triple digits here. So I'm going to keep a very close eye on this guy. I've got a debit pending at 12. It's trading for about $13. If we keep going higher to close out the day, this could be good. Another 9 to 10 points higher in SPX could actually yield a few $100. And I'll still grab the extra 40 for that butterfly I just put on. So I'm going to keep a close eye on this one for the next 17 minutes. This one's going to be a full profit. This is the one I'm watching closely for a big profit trap. If we get another 10 points of movement, hopefully we do. And I want to check TLT per Ryan's question. So let's go TLT positions. TLT, my diagonal spread is a 65 by 89. So this is out to September 30th. If we catch a decent little bid, I might end up closing this. If I see this thing in profit, if we get back to 89, I'll do the math. I'll see what it trades for. Let me go into here, and I'm just going to get this organized so I can just close these out a little bit simpler. So I will remove, ungroup this one, and then regroup. So it's going to be a diagonal spread. This one here, ungroup and regroup. Diagonal spread, ungroup, regroup. Nope. Diagonal spread. So just a little bit of maintenance here. There we go. So I do like the bid. I like the bid on TLT. I think we have a little bit of a risk off tone. The dollar's catching a bid to the upside. The dollar's been pretty bullish this entire week. So yeah, I think that getting a short-term pop on bonds is probably a good thing. We will see if this does anything to yields. You know, I mean, today's core PCE and headline PCE did not look to be encouraging for how the Fed's going to be behaving over the next couple of months. I mean, I'm sure they're still looking to cut rates in September. What I did see change is it looks like a September, October, December rate cut potentially based on probabilities. I don't know if that's going to be taking place or not. I feel like they're kind of backed into a corner. You know, the Trump administration is going to continue to talk probably pretty poorly about Powell and kind of discredit him a little bit. But you know, rates are rates, and we'll see what the Fed ultimately does. Things change, we know, but I think they've been, you know, more than transparent, almost to a fault, where now they're almost hesitant to do policy change, and without letting like the whole world know way ahead of time. So it's so weird how the Fed works, where they get a lot of free mileage out of what they say, and then they can take a long time before they actually have to do anything. You know, they raise rates late, they cut rates late. I know that's been a big criticism of the Fed these last, you know, whatever, 10, 15 years. So it's been like dial up and dial down quantitative easing, quantitative tightening, rates up, rates down. We've always gone back to just taking rates down to, you know, sub 1% and thinking that's going to be a good way to do it. It doesn't work that way. I think we're in an interesting time administration wise where we're trying to grow our way through things, and yields matter. Right now, I mean, if people want to be savers, you can technically be saving at like 4 to 5% without taking the risk of the equities market. The problem is, I think you're going to be outpaced by inflation and loss of purchasing power. Okay. Profit trap for the end of the day is going to be the 64.35. Irene's asking that 64.35 would be my $500 profit trap. Yep. All right. What else do we have on TLT? I'm just updating these. So ungroup and regroup. This one has shares. That's fine. This one has no exposure, and no exposure. Okay, so all the TLTs have been just organized better. So now when I look at my positions on TLT, it'll make a little bit more sense. Now I have all diagonal spreads. So I have the 65 by 89 that gives me a potential credit of about $24. It says 2160, but I know my cost basis is less. This diagonal spread I've been able to chip away at for quite a while. So TLT overall, my break even is 18.82. So 18.82 is my break even on the debit plus the 65, which means my break even is around 83, 82. If it gets up to 89, okay, that's 518, and I have 4, 8, 12, that's 14, 18, 20, 22, 24, 28, and 30. So I've got 3,000. So 518 times 3,000, about $15,000, 15.5. And that's just trying to get out of the trade. I have plenty of time in this. It's just not an instrument that I want to hold. I'd rather use this buy power to add more gold, add more Bitcoin, add some alternatives, enjoy the melt up with maybe stickier to higher inflation. I think TLT is going to be lackluster, and I just think there's no proof historically speaking that a 60-40 portfolio performs well. You can put 40% in gold and it's outperformed. You could put 40% in Bitcoin for the last 10 years. Mixed with gold, it does extremely well. I think the alpha that most investors are looking for in 2025 and onwards is probably going to be gold, Bitcoin, and overall assets, i.e., the S&P, the Nasdaq, just being invested. The indexes work. We're talking about what sector to play and what stock to play. It's always mesmerizing to see how people scramble trying to find and chase like the best stock. Nobody knows. I think the best stock, like a Palantir or a HIMS or a Carvana or an AVGO or any of the like the Metas and Microsofts that ripped up like we've seen this year, great. But ultimately, what benefits? The boring old S&P, the boring old Nasdaq, the boring old Dow. The Russell will be interesting, but the Russell still has a potential great catch-up trade for 2025. Okay. All right. So as we come in here to the final minutes, we have 10 minutes left. I'm going to be kind of spot checking here my SPX. We're trading at 63.44. Potentially a profit trap in here. Still won't irregular group it. So this is a broken wing butterfly. Now I can keep an eye on this thing. So my broken wing got in for 40 cents. It's going to cash settle at 40 cents as long as we stay above 63.35, potentially as a profit trap to also get me the bonus credit from 63.40 down to potentially 63.31, which would be a fresh low on the day. So I do have bonus traps there if we get something testing today's lows. So that might actually work out to offset my iron flies. Like this iron flies down, this iron flies up slightly. I'm trying to get a lucky trade here the last 10 minutes to see if we get back to like 65 or 75. That's a tough go though. 10 minutes left. We got to have a 20-point rip. We'll see. We will see. All right, so keep a close eye on that. 35 is right at my lows. Here's what I'm watching. I've got my screen up here. I've been watching this thing all day. There's just a ton of adjusted gamma levels and liquidity levels just kind of bouncing around. And we'll see, do we end up, getting back down towards the lows of the day? I hope that it won't breach the lows, but I do have room, and I'll kind of highlight this here. If I box this in, I have room from the 35 down to 31. So that is potentially a profit trap zone. If we're in that area, let me see if I can shade this thing yellow. Line study. That's so weird. Oh, there we go. There. Okay, so that little yellow box as we are approaching. Okay. Come on, markets. You already stretched way above the VIX. High to low in the day. We're exceeding that. Come on, don't be too dangerous now. I'm hoping that this is just a fake out trade to the lows and we bounce back up. Broken wing. All right, got to keep a close eye on this one. So I need this to stay above 63.31, or else I take on some heat. Hopefully we're at 35 to 40. We did have a breach of, really from the top down today, we've had a big breach of all these levels. So that's pretty rare to have, what was expected to be about a 1.1% move is now proceeded to 1.48, possibly going a little bit lower. Like this market is not finishing the month very positively. We're still positive for the month. And this is what I expected was just like the push up to then start to fall. I think there's a pretty good chance we have a nice August correction. And looks like the timing of that is starting kind of now. And going into August, again, I've mentioned the 21 period, 50 period moving averages right here. So watching that closely. How ugly does it get? We'll find out. There's previous all-time highs right here I think need to be checked. So come on, price. Don't do that. Don't do really stupid stuff here. Don't get below 63.30. All right. Well, in typical fashion, let's see what happens here. I've got about 7 minutes left, and I'd love to see price stay above 63.31 to cash settle. Ideally, I'd love this thing to settle at 63.35. I get super lucky on that trade. Where are my little bottom bulls at? A sign of closing on the lows would not be a good sign. That would be an awful sign, actually. Like, just, and again, to what degree, just prepare for more downside. You know, this pullback here down to 62.87, this pullback here to 61.41, a big round number pullback like 6,000, volatility ahead. You know, all these things are just technically due. We are overbought with a lot of divergence on multiple time frames. So let's see how that all shakes out. I'm excited. I mean, I'm excited for these corrections to be underway. We've got some good hedges running with my crash insurance masterclass. If we get one to pay us really nicely, there's like a $250 risk that could pay us up to $2,500 per contract. So not a bad fill there. So, you know, we got some opportunities. And also when we do pull back into the zone, you know, I do think that this entire area is, I'm not sitting here trying to call the bottom, but it's like in this area, I'm going to position my options so I can buy the dip. You know, I want to position some option trades where I can still generate income and have the dip. Okay. So we will keep an eye on everything. But this monthly close, 63.31. Come on, baby. 5 minutes left. It's kind of crunch time. So that gap up, how did I get that number today? We're at 1.57%. Oh, I know how. We talked about the big gap up and then also taking the day's consideration from high to low. This really shouldn't be going too much lower, but it's trying. Come on here. What happens these last 5 minutes? Get above 63.31, please. That would be nice. Just a little poke to the upside. Like, eat into this candle these last 5 minutes, I would be really happy. So that inefficient candle, pop back up here, maybe. Oh man, this could be so good. This could be so good, or this could be so bad. It's you're about to find out. So right in here, if we come back and test this level at all, that's going to be kind of a perfect spot for my pin price and a bonus trap. So we're about to find out these last few minutes. And just like that, I mean, if we get up to like 39 or 40, you know, that profit trap is gone. I'll keep my 40 cents. But if this closes right around like 36 or 35, so far so good. Let's keep it there. Come on. 4 o'clock at this point can't come soon enough. Okay, so that profit trap is 63.35. Again, if we're up above 63.40, no big deal. I'll keep my 40 cents. If we're at 39, it's a $100 profit trap. 38, $200 profit trap. 35 is perfect. Not something I get to do all the time. It's very difficult to pin price. It can go all the way down to 31. I still have a $100 profit trap on that. So time will tell. I'd love to get a nice little bonus trap today if possible. This is up. Ooh, baby. See what I can get here. Close. I might just try to grab it. So I'm getting, so it's bouncing around between credits. We're at 35. We're in the final 3 minutes, dude. See if I can grab a bonus trap here. This might, oh man, this is going to be close. I'm going to try to get a $2 profit trap here and just set a take profit order. If we're hanging out at like 63.35 these final minutes, it's going to be close. But I'm seeing some profit. That's good. So I took the trade for a credit. It's still offering a credit. All that is good. We're at 63.35. We have the final couple of minutes. It's crazy how these butterflies they just rip up to those profit trap zones in the final 5 minutes. And here we are in the final 3 minutes. So give me a profit trap. See if I can get this broker to close me. If not, there at least is a run. We're at 37 right now. And would you give me $1? Can you give me $1? So I got 40. If I can close this out for $1, that gives me $1.40 on the trade. Trying for that. And if it doesn't close, obviously I'm going to see how it settles. There's still like bonus trap potential these last couple of minutes. It's not. All right, I just got filled for a buck. So that was a quick $1.40. Now I'm going to sit here and, job on it for the next 2 minutes. But right now would be, if it closed right now as is, that'd be about a $250 profit trap. I'm taking the extra $100. So that trade that I just took at 339, I closed out for 358 for $1.40. So that was a little bonus winner today for $1.40. I'm going to sit here for the next 2 minutes and talk through it. If we're trading right at 63.35, guess what? That would be a perfect $500 trap plus the 40 cents that I got. It could be, 540, but I like taking profit at the end. We're in the final minute here. And also if price were to scream up to 63.40, I would make only the 40 cents. So I'm going to take that profit trap and walk away. And the risk on the trade was like $960. So obviously I'm happy that, making $1.40 is pretty sweet. And if we, rip up here to the final few minutes, we'll see how it shakes out. So that's $1.40 there, plus an extra 90 cents on my daily profit play. That's all in all pretty good. I'll take that for the day. So $1.40 and 90, so $2.30 on the day. I'll take it. And let's see where this thing settles here by closing bell. So if it closes right at 63.40, I'm only keeping the 40 cents. It's at 41 right now. It looks like it only have the 40 cents. So far I feel like I made the right decision by closing it out. Yep, so we're at 42 right now. Closing bell at 42. This will settle here in a couple seconds. Okay, I did the right thing. So I took my 40 cents, closed it out for an extra $1, so that's 140 bucks at the very end. Not a bad trade for 18 minutes. 18, 19 minutes of trading. On top of the daily profit play, we're going to take that winner. All right. So bonus trade, daily profit play, full winner today, and then final hour bonus trade is a 140 credit winner to add to the total. Cool. All right, so that worked out. Certainly don't like doing that all the time, but that would be another profit. So if I let it go, this settled at 63.39.54. This settled at 63.39.55. That would be about a $45 profit trap on top of the 40 cents. So I technically made more money than what the cash settled position would give me, which is nice. So I'll take the bonus. It's always nice to grab a little bonus there. And for the day, I mean, that's a pretty rough day. High to low intraday price action, 1.55% to the downside. We talked this morning during daily profit plan, maybe having the gap kind of threw off the plan for the original, rule of 16. And even today, like the VIX is not at 19 or 20. The VIX is just choppy today at 16 and change. So we only expected like a 1+% move, but because we had such a big gap, it's like if you have the gap up here and you have the volatility on top of that, it just was kind of we were potentially projecting like a 1.88% move one way or the other. So it ended up getting like 1.55. That's not bad. It did exceed. This is kind of crazy. Take a look at my levels here. So that was a nice little trade. My levels here for the day. I want to point this out. This 100% ATR on the upside as well as the 100% ATR on the downside. Price today hit both of them. That is a wild and crazy volatile day, everybody, right? So because of that Microsoft and Meta gaps to the upside, the S&P gapped up around 0.9% today. That's where it started, and it just faded all day. So we were already above the 100% ATR. We proceeded to go back down through the gap and even lower to the opposite 100% ATR. So that's a lot of volatility for today. And coming out on top is a good thing. So how do we do today? Daily profit play, how do we do? Did anyone stick it out with me? Who took profit early? I'm just curious. For daily profit play, this is our dead zone. So we wanted to see price below this or above this, and it was below it, right to it again, and back down. So I held on to it all day and took that full winner. So I'm going to update that for the tracker. It's going to settle. Nice little win. And then I'm going to add the little bonus trade. That would have been trading around 63.50. That was a buy 6340, sell 6335, buy 6. That's a put. And a sell 6320 put. Pulled in 40 cents, closed out for $1. Okay, nice little $140 winner there. All right, all in all, pretty good. There you go. Anthony says took early profit at 560. That's smart. What time was that? I was actually I snuck out to get a gym session in, and I was watching things at the gym. So by the time we revisit these lows around 63.70, that's around 1:45, 2 p.m. It was already trading for like 560, 550, 545. I was comfortable holding it once we hit this level and started to head back down to test the lows. I'm like, I'm going to take my chances on that. So I was, I know there's risk. I mean, we could have come back into the dead zone, but given the fact there was a gap there, I didn't see really any major levels outside of, okay, if we breach 64 right here, so we break, retest, and we fall, right? And I knew that we had a nice sticky level down here around 63.70 and the previous low from the Fed yesterday around 63.40. So that momentum has been pretty steep. PCE numbers, I don't think the market could get super excited about PCE numbers today. So, I took the calculated risk and let things go for the day. It worked out. Lee says had a great trade today on Rolls Royce, hit early highs or hit yearly highs. Very nice. Larry says get out early at 70 cents. Nice. That's still good. Richard says stayed to the end. Irene, very nice. Excellent. So we can grab a 100% winner there. Pretty sweet. I'm actually going to I'm going to throw a couple graphics on here. So that was a 100% winner. So 100% winner. And down here, so 40 cents credit, close it out for $1. So I get $1.40 out of the original 40 cents. That's a 350% winner. Not bad. And that was just popping in here to this final hour session. So grabbed a nice little winner there. All in a day's work. So, it helps when you don't mind sitting down and watching price action for the day. Also measured out levels. I mean, I was pretty cautious on, just calling like the top at 1% today. Obviously the best trade would have been if the credits were there, the best thing that I would have done this morning would have been trying to sell bear call spreads this morning. I wanted to, but we looked at the levels. I calculated the move. I looked at the levels. It was just too far out of the money and the credit was too little. So it just didn't work. And I don't like to get in the trenches in a 0 day because, you have to really, sell at the money and then see price go your way. You've got to be like on point directionally in order for those to work out. So I'm just going to post this in a Telegram here. All right. Made $2 on the 200 bear call spreads today, Larry. Nice. Yeah, good. So, all in all, look, we keep fighting the good fight. I think this is a good start for things. We finished the month of July. Okay, here's SPX for the month. The July candle still positive. I mean, so it's not like today, honestly, it's like it doesn't matter. The broader market's still like, hey, July was a good month, right? You can spin this a lot of different ways to make it seem like it's positive. April was a climb back, big pivot in April. May was positive, June was positive, July was positive, and they probably will remain resilient, but I just think we're going to have a pullback. So I'm hoping that as we kick off August, things might get a little dicey, but just be prepared for it. So this little dicey pullback zone. Just be prepared for some more volatility ahead. It's never easy when the market decides to drop aggressively, right? Everyone's like, oh, bad. How bad is it going to get? How high is the VIX going to go? I mean, the VIX didn't do anything today. The VIX is at 16.94. Big whoop, right? If the VIX spikes up to freaking 20, then yeah, we're going to see some aggressive downside movement. I say, like, right now we have all these volatility suppression funds that are trying to just sell VIX the whole time. If the VIX spikes up to 19, they stop doing that action. They stop selling VIX, and that's why the VIX can explode higher from 20 to 25, 20 to 30. If that happens, then I think that's how we get a similar correction to what we had last summer, which was, if you remember, last summer's July hiccup right here, this July hiccup last year, the VIX spiked up to freaking 35. Like we had a massive VIX event where we went from essentially 15 to 35 or 36 in a couple of weeks. So if we have another VIX event like that, then that's a 10% correction, and we can certainly get another one of those. If we go 10% off of the recent highs that was today, a 10% move flushes us down into this like 58 to 5,700 zone. I think that is another clean technical level to pay attention to. Okay, so I'm just putting it on the radar, expecting this pullback window, and I'll put a note here, potentially, 10% correction. Especially if the VIX get involved and things start to move really quickly, then yeah, we'll have that 4 to 5% kind of likely correction, and then 10% would be like, yeah, fudge, we got a lot of volatility, we have to handle that. I'm still buying the dips though. I'm still positioning for lots of options, wide margins for error. This will be perfect for waterfall income. This will be perfect for daily profit play. This will be perfect for news for double up alerts. There's a lot of services I can run where we can take advantage of that type of agility and positioning. Okay, what was the event? No event. There's no event, right? The only thing that really was really disruptive this week was copper. Copper was the only thing I could see that was like, oh my gosh, I cannot believe that happened. Copper has had one of the biggest single day moves and possibly one of the biggest, largest weekly candles that it's ever had in history. So that's one thing. But I think this market is going to be, still somewhat resilient. Bitcoin at 116, still hanging in there. Let's just do a little top down before we go today. So dollar index. Okay, dollar still catches a bid. 1, 2, 3, 4, 5, 6 days in a row, dollar long. Okay, do we finish the start? I mean, we have non-farm tomorrow morning. We finish out the month with like another positive bid on the dollar, possibly. If we go gold, I did catch a little bit of a bid on gold. We'll see if the dollar fades at all and gold just hangs in there. Silver, nice little pullback on silver. I should be buying silver. I think I have a silver position. Silver is not filled yet. Actually, it is. It's long. I'm up $465 on silver. SPY and Q short, I'm up over $1,000 on those as well. Okay, we'll see how this plays out. Some interesting developments here. So hopefully silver gets a little bit of a bid off this 50-day moving average and higher. Bitcoin, if we pull back into like 112, 111, 110, I think Bitcoin looks pretty solid. You can pull back. You can be a bit more aggressive on Bitcoin. We could pull back into these like uglier moving averages, but as long as we go back up, right? As soon as I see like this, some type of downturn closes back above these moving averages, that could be a low, and you look to break the highs again. And you stay with this trend, stay with this trend, stay with this trend. And if it goes a little bit more euphoric, great. Get up to 125, 150, whatever. I'm watching Bitcoin for those levels. If the markets are resilient, Bitcoin's going to be resilient. Okay. MicroStrategy at 401. They have earnings today after market, so we'll see what MSTR does. Coin has earnings after market. Apple has earnings after market. So tomorrow is another day. Coinbase reports rise in quarterly profit subscription strength. Okay, fine. Post market is down about $27 though. So interesting. Apple is actually up a couple bucks after market. Amazon had earnings today as well. Amazon is down about $6 post market. We'll see what this means. We'll see what the readings are tomorrow as far as top and bottom estimates on Apple, Amazon, which is another big pop for earnings. AVGO, big sell off today in AVGO. Let's take a look at the heat map. I feel like maybe we had 65-70% of stocks down today. We had 67% of stocks down today. AVGO was a big one. Tesla was a big one. So Tesla was down 3% today. AVGO down 3% today. NVIDIA down 0.883%. Microsoft had a big gap up, all the way up to like 557, but we faded hard. We still held because it was such a monster gap. So a little misleading. Like price action today was gap up and fade all day. S&P ended up finishing red. Nasdaq finished red. Microsoft, finished green, but it gave back gains all day. Amazon was up for the day. We have earnings now, so we'll see if that holds or it gives some back. Meta ripped today. Wow. Well, that's the same thing. Like they were up and they faded. I think. Let's go to Meta. I forgot about that. So Meta, actually, didn't do anything. Like that was up here to 784, just a big fat gap candle. Microsoft, a lot more. Gosh, I really wish we got filled on Newsbreakers trade. That was such a good position. Unfortunately, just didn't offer the credit that I wanted. That was the crappy part. We had a good trade. We tried to sell a 550 by 555. I just tried to get more credit than so I wanted more reward potential than risk. And the broker just said, nope, it's not good enough. Amazon beat, yeah, and that's the thing is like they can beat, but it doesn't mean that price is going to go up. Like if this is the broader market right now where things are like they gapped up, they pushed up for July. Now we're starting the reality check of August. Non-farm payroll comes out tomorrow morning. We'll see what it means. PCE was high today. So anyway, we'll see. Tesla down, Meta up on that earnings gap, and it just held there. Google down, Netflix down. Healthcare getting slaughtered today. All red in healthcare. UNH down another $10. Defensives mixed. John Deere up, Caterpillar up. Yeah, so about 70% of stocks down today. Not great, but it needed to happen. This all needs to happen. It never feels fun watching red in the markets. It never feels good. This is why you have risk management. This is why you never take huge trade sizes and over leverage. This is why you have risk adjusted hedges. I mean, I pay a little bit every 3, 6, 12 months. And if hedges work out and I need them, great. I've got hedges to December, hedges to October. And if I need them, hopefully they can help offset some of the drawdown, right? But where to? Minimum pullback 21 period. Next pullback would be between the 50 period moving average and my all-time highs. And if it gets a little wilder and crazier with volatility, then we expect this to go maybe in the 8 to 10% zone. I still think there's a lot of good support above the 58 and 5700 zone. So if we come down to retest this like 144 to 200, like I said, services that I'll be very aggressive on, waterfall income, double up alerts, daily profit play. Obviously, we can take advantage of that day to day, but that'd be a great spot to be positioning for, a kind of interim bottom. And waterfall will take advantage of that are cost effective. Double up, same thing. Daily profit play, same thing. Waterfall also, I get a little bit more flexibility where I can build out some trades that give me a huge margin for error in case things get really bad, and I'm willing to own and flip it. So between rolling some covered calls this week, daily profit play has been doing pretty well so far for the week. We are sitting at let's see, 31st. What was our start of the week date wise? The 28th. So 28th, 1, 2, 3, 4, 5. We're 5 for 5 this week on daily profit play. Hopefully we can add another one to the mix tomorrow. All right. So we'll keep an eye on volatility tomorrow. Non-farm payroll in the morning. See what happens if there's any type of price gapping. I would imagine this market, now that the month is over, I think this market's going to struggle to get back to these highs, at least in the near term. So if we have anything that's good, I'm going to try to fade that because I think those corrections are coming sooner rather than later. So a meaningful correction, I'll change my tone a little bit. For at least right now, I expect the market to be a bit more risk off. So whatever that means for you, portfolio-wise, adjustments-wise, risk-wise, don't over leverage. This is why I still have lots of cash at the ready, and I want to deploy that cash at good levels. So minimum levels here. Potentially this little window down into this like 200, so be like 59 to 5,700 would be a bargain if I can get some positions down there. We'll see. That box I don't need. That box is kind of a big cluster of garbage this year. This little box I don't need. All right. So let's clean my charts up a little bit. Also, if you're in my waterfall income, we have some of those call condors that should be looking pretty good as well. I put those positions in here. So, I'm down $30, I'm up $40, and I'm down $30. if price is going lower, these are going to continue to look better and better and better. The credits on these are pretty promising: 160, 125, and 230. So that's a good looking trade for these next 30 to 50 days. That would be 160 plus 230 plus 125. So over $5 of credit that we pulled in. I'm going to try to take that 515 credit and close that thing out for at least 50%, if not better. Okay. All right, good stuff. Any questions for today? Glad we had some good daily profit plays. Glad we did pretty well. Let's come back and do it again tomorrow. Let's jump back in the trenches. It's August 1st. We have non-farm payroll. We also have a tariff deadline. That could be another thing that hits the headlines tomorrow to kind of drive this market down. Maybe every country that didn't sign up to do a trade deal with the U.S. is all of a sudden going to be, who is it? And what are we blanketing their tariffs at? Is Donald Trump going to be, calling everybody individually and calling hundreds of countries? We're just going to write a John Deere letter that says you all owe us 10 to 50% for anything you want to do with the U.S. How's the market take it? Are we adding? Is this like a milder? But I would say is this potentially going to be treated like the market, like Liberation Day 2.0? Maybe, right? Because what did we do here? We paused 90 days, right? We paused 90 days. The market has ripped. There's our U.S.-China trade agreement pause. There's our ceasefire. That's peace in the Middle East. And so no tariff threats. Up, 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 right? So could tomorrow be like, hey, look, it's August 1st. This is a trade deadline for the U.S. What does it mean? We've already started to kind of sour the mood of this rally. That's a pretty big candle, So if we sour the mood here, there's certainly room to fall in the near term. All it takes is that Y to get the market going a little bit lower. That's fine. I'm just going to look to fade. Okay. Right. So unless it gets extended, right. So I'm saying as long as tomorrow's not like, hey, another 90-day pause. I don't know if the market's going to like that, though. I mean, it's like, what are we going to do? Are we just going to pause forever? That's silly, So if we're going to be firm on August 1st, it does mean something. So this could be, I don't know, this could be like a milder version of Liberation Day. But again, I'm going to fade this move. It's not that difficult. Look, this is a minimum pullback. This is a minimum pullback. Anything deeper than that is just higher volatility. I'm looking to buy and position for buys in here. I think we have all of a 5% correction, possibly 10% correction. If it gets a little nastier out there, okay, fine. It's still just noise. Okay. I don't think we come all the way back down to these lows. I think this administration is pivoting so hard. We're not trying to break the global economy. We're not trying to break the U.S. markets, right? We're not getting this instant rotation out of U.S. assets and going into the non-U.S. assets. So look, there's a lot of dynamic support. Trade accordingly. I like these levels for taking nibbles, taking bites. Do we end up finishing at highs for the year? I think so. Right. So I'm not going to be the type of trader that's like, I've got to wait for a pullback and wait for confirmation. Look, if I get the level that I'm interested in, I'm putting a trade on. The beautiful thing about trading options is you can take a trade based on price and time. As long as my price is where I want it and time is favorable for me to get the direction I need to get me in profit, easy trade. Okay. And could I lose and could I risk? Of course, I could lose and I could risk. But that's what trading is. It's calculated risk. So if we go lower, the nice part is these trades that I just talked about, this is worth about, I'm trying to think here, 515. So 515. I mean, just being right on my waterfall income is worth about $7,700 in the next 30 to 50 days. That's okay. And I'm actually benefiting from some of the downside. So, and I can also start positioning up here. So once we revisit highs again, I can stack it up and do it all over again. So we just keep trading. All right. Any questions for today? So correction window, I think it's underway. Watch your 21 period, watch your 50 period, watch that volatility index. If the VIX spikes above 20, we could probably have another push up into 25 or 30. Just be braced for that. Don't be a hero. Don't take unnecessary risk. Just be systematic in your trading, manage risk, and we'll grind through this. And I'll be here every day. We'll figure it out. Okay? Easy peasy. All right, everybody. Thanks for being here. Thanks for tuning in. Appreciate the like, subscribe, all the good stuff. Click the thumbs up button, whether you're on youtube.com/Chris Pulver or youtube.com/Financial Wars. I'm going to see how the rest of my trades are doing for the trading battle. I've got about $1,500 riding into some profits right now. See what happens for non-farm payroll tomorrow. All could be very interesting. So we shall see. All right. Thanks, everybody. Talk to you soon. See you tomorrow.